Back with you on Market Day Report on a Monday. I'm Marlon Bowling with you to watch your ag commodity trade. Have all kinds of information flying around today, and here to help us sort it all out, we'll bring in Jim McCormick of Allendale Incorporated in McHenry, Illinois. And Jim, thanks for joining us here today. We had heard a little bit ago from USDA. We got some new export inspections numbers. Now, with everything else going on, I don't know how much attention they're getting, but let's take a look at what the numbers are this week. On the corn export inspections, it looks like we have a total of about 805,000 tons compared to last week's 720,000. And on the soybeans, 716,000 compared to last week's 668,000. And the wheat, 670,000 tons compared to last week's 592. Is it really having much to do with today's trade, do you think?
In my opinion, no, Marlon. I think they, the numbers are just a number. We kind of glaze by them really fast. I think there's two things that are driving the market right now. In the corn specifically, you're seeing a lot of grain be pushed to the market. It's the end of the month coming up. A lot of cash contracts, grain sitting in the elevators being forced to market by the close on Wednesday due to the first notice day on Thursday. So that's pressuring the corn market. On the other hand, you're seeing a little bit of support in the beans right now. They're up 1.5 cents, and I do believe that's due to the hurricane. It's clobbering Houston right now. We know it's just an absolutely devastating flooding going on in Houston, but the fact is it looks like as we go through the week, that rain is going to progress into the Mississippi Valley, and the fact of the matter is we got about 67 million beans in Louisiana, 172 million bushel bean crop in Arkansas, and about 150 million bushel bean crop in Mississippi, or roughly 350 million bushels of beans that could get 5, 6, 7 inches of rain in it, depending on which forecast model you're looking at, right on a crop that's right on the cusp of being harvested, and that could do some damage. And I think that's given the beans a little bit of support today, plain and simple.
And for those that may not have grown up on a farm, they may not be aware, if you get rain on mature soybeans when they're starting to dry down, what happens is the pods pop open and the beans just simply fall out on the ground, and there's no way to recover them. They are lost. So that could be the case. And if you get mature soybeans in there and you get weather like this impacting them, boy, Jim, you make a tremendously good point. I'm glad you brought that up. We'll have to keep an eye on that. All right, let's look at our current prices here. Run everything down on the corn first. Here we go with a look at our corn trade. We have December new crop corn still down a couple of cents. We're at $3.51.5 per bushel, a penny from our low of the day. In the soybean trade right now, you have your new crop November contract a penny and a half higher at $9.46. That has already bounced 8 cents off our earlier low this morning. That's interesting. We're still about 4 cents away from our high, though. If you look at the wheat trade, in Chicago wheat, lots of pressure continuing today. December down 7 1/4 at $4.28 per bushel. If you look at the Kansas City market, we have December currently down 8 3/4 at $4.23.5. That is still about 8.5 cents off our earlier high of the day. We're within a couple of pennies of our low. Keep in mind, about a fourth of the U.S. wheat goes through the Houston and maybe Galveston terminals heading out to sea. Let's take a look at the Minneapolis wheat trade, and here we have the December contract down 6.5 cents at $6.62 3/4 per bushel. Meanwhile, on the cotton trade, lots of impact in the South. December cotton up 158 points today at 69.73 cents per pound. Big impact there, knocking on the door of 70 cents again. Jim, we'll bring you back here in just a moment, and you and I will talk about the latest information related to our livestock trade when we come back. We are talking right now with Jim McCormick. He's with Allendale Incorporated in McHenry, Illinois, and he rejoins our conversation here right now. And Jim, I wanted to look at some brand new numbers that are just coming in from USDA. It relates to our livestock side, and it's our midday beef and pork cutout values. Let's take a closer look here at the wholesale beef trade today. And on the choice cuts this morning, USDA pegs that price at $191.51 per hundredweight. That would be up 19 cents, a very modest, very meager gain. Selects priced at $188.83 would be up 53 cents on the day. So now that spread between the two stands at $2.68. Meanwhile, we have a new update on the pork carcass cutout values, and they are now 42 cents higher today at 86.83. The other primal cuts, though, all just slightly weaker, so not much movement there. If we look at the live cattle prices at the present time, we had a heck of a surge here about an hour and a half ago. Right now, things have still kind of stabilized. We have October 208 higher now at 109 even. We're still 75 cents away from that big surge we had early on. December, $2.02 higher at 111.95. On the feeder cattle side, we have the September contract now trading 326 higher at 146.18. October now up 367 at 146.62. So, Jim, it looks like just in the last 20 minutes or so, the market is like catching its second wind and starting to firm up once again here.
Yeah, it is. Like I said, the cutouts, especially on the cattle, were higher finally. So a lot of the traders are looking for the cutouts to see if the box beef, if it would start to stabilize and firm, maybe that'd be a good sign that this cash market is finally stabilizing. The cattle feed number was also viewed a little bit friendly, so that's helping the cattle market a little bit. And then lastly, to kind of bring back around the hurricane story, our calculations are roughly, 25% of the cattle there in Texas, one of our second biggest cattle states, is dealing with some of this heavy flooding and heavy rain. So that's probably putting a little bit of support on the market right now as well.
Yeah, admittedly, the largest production of cattle by far is going to be in the Texas Panhandle in the west central part of the state there, that's for sure. But there is a significant amount spread throughout the state. And since that is such a huge state, we're dealing with a lot of numbers. They had about 2.65 million head on feed, I believe, on the last update.
Yep.
So that's definitely nothing to sneeze at. That's a very large number overall. Now, if we look at the lean hog trade here today, we have seen follow-through selling, and it seems like it's increasing here, Jim. We have October now down $1.13 at 61.95, and now December down $1.17 at 57.78. So now it's solidly under $58 on that December contract over here. And chart-wise, this is starting to look fairly dire on the lean hog trade here. What do you think?
Well, I think that's exactly that. I think chart-wise is really what's driving the market. We've, on this front month, October hogs, we've now we've easily cleared the previous low, that 62.42 level that was made back on April 21st. Once we took that out, the technical sellers, the fund sellers are just continuing to sell into this thing, and that's what's fueling it. The charts look really bad right now, and it's just encouraging that, like I said, the technical sell pressure, plain and simple.
Jim, is this the type of action you normally see at this time of year, though?
No, this isn't. I mean, it's not. But one thing I can say about this year, it's been very strange all the way around. I mean, the cattle market ground a lot higher than a lot of people thought it would. Now it's grinding lower, and we're in kind of strange times right now, in my opinion, in this livestock market.
Now, we have had decent export sales here recently. The dollar, I believe, is at, long-time lows here. Do you think that can help pick up this market here?
Oh, I believe it will. In the long run, I mean, the old line is cheap commodity, cheap prices cure cheap prices, and that's what's going to happen in the long run in all these commodities, corn, beans, wheat, cattle, hogs. The dollar is going to continue to weaken. My guess is it'll continue to weaken until we get through this debt ceiling crisis that could be building over the next 30 days. And as that goes down, it makes our products cheaper on the world market, which is what we want to see, and that'll help. The other thing we do need to keep an eye on, though, is we got all these trade negotiations going on in NAFTA right now. Agriculture has really been helped out by NAFTA, plain and simple, and if NAFTA blows up, it will be negative all commodities.
All right, Jim, good to visit with you. Thank you for all the insight into the markets. Excellent stuff. Jim McCormick of Allendale Incorporated in McHenry, Illinois. So there's the latest. Cattle starting to surge again.
Okay.
Second time today.
Change of pace. Thank you very much, Marlon. Appreciate it.